Mr. Angelo, you spent 25 years in global markets. How do you see the current global macro cycle evolving in 2026?
I've been pretty much going on TV, on CNBC for more than 10, 15 years, so interviewing almost on a weekly basis. And I've been working the market since December 1999. Well,
you emphasize autonomy and discipline. What are three major common mistakes investors are making?
Investors, they have no idea what risk really means. I keep reminding them, look, you can control only one thing in financial markets, and it's called risk. So this is something that eventually they don't know how to deal with.
Multi-asset strategies truly protect portfolios during downturns.
A very good point. Technically, the idea of the hedge funds is to hedge risk. Now, the reality is some of them, they're very directional.
What differentiates your upcoming alternative fund from traditional asset management models?
As of 2024, alternative assets, and whenever I say alternative assets, I say private equity, hedge funds, arts, you name it. They are almost, they may almost 20% of the institutional investors' portfolio.
Do you believe hedge fund style strategies are the future of portfolio management?
They are already some of the present, and it will be even more in the futures. The assets are, according to the Financial Times, macro fund, the multi-asset hedge funds. They might see the asset under management keep increasing in 2026 because of their performances.
Dear audience, this is Sher Afzal, the founder, the chairman of Global CEO Club Private Limited. It's a private limited company registered in Pakistan. The headquarters is based in USA. I started this journey around 7 years ago, and now it's scattered all over the world. Global CEO Club has multiple business segments like international business collaborations, business networking, investments, marketplace, podcast, many other. The CRM of Global CEO Club is on the way to be launched, where every member of the club needs to be registered with the CRM. So thank you. Today, we have invited, we have requested very prominent, very energetic, very passionate, very honorable personality, Mr. Angelo Sia Varela. He is a big investor. He is running a big investment company also. So I request Mr. Angelo and Tesivald to introduce yourself to the audience of Global CEO Club turn by turn. Thank you, sir. Yes, Mr. Angelo.
Thank you so much, Tesivald. If you want to go first, please go ahead.
Okay, very quickly, I'm Tesivald. I have a startup launched on 2023 at the moment, sorry, 2021. At the moment, I'm following international relations and management, where I bring close expertise and investment for the needs of specific clients. We do look at the specific needs, and then after we understand what the client is looking for or what is needed, we connect with the right people. In this case, we have here Angelo Ciavarella, who is launching a trading fund in Luxembourg, where the details will be disclosed soon. So please, Angelo, introduce yourself and give us an overview of the fund. Thank you.
Sure. Thank you, Tesivald. Thank you for having me here. Very quickly, a little bit of background. I live in London. I've been living in the city, actually, of London for 17 years now. I've been working buy-side, sell-side company, E-Trade, Morgan Stanley, Infinox Capital, etc. In the last couple of years, I've been working on my own project. Namely, I'm launching, as we speak, alternative investment fund based in Luxembourg, which is, as you know, the second biggest jurisdiction in the world for funds. There are more than 5.5 trillion of money based in Luxembourg. I'm also teaching as a lecturer at University of Greenwich. I've been teaching for 8 years in a row, and I'm teaching trading in financial markets, pretty much macro applied to financial markets. Now, the idea of this hedge fund is basically two sides. One side, we will be trading Brazilian assets with an arbitrage strategy, Brazilian asset and US assets with an arbitrage strategy. And this strategy has been up and running for 4 years with a fund of 25 millions, making on average 12 to 14% per year. All trades are audited, and therefore we are kind of trying to get onto the big family office or asset management companies. This is the target of this particular strategy. So this is one side of strategy. So Brazilian assets together with bonds, Brazilian bonds, namely zero coupon bonds. They pay very good money, and they are also hedged in the US dollar. The other part of the strategy, the outlier, is a strategy in volatility options, which with the aim to shield the fund and the performances in case of turmoil in markets, which might be happening at some point, as the conditions do remind me a lot about the situation in 2000. Also, markets haven't seen a proper bear market since 2008, with the exception of 2022, which lasted probably less than 9-12 months. So we are there to ensure our clients to make is an absolute return fund with a twist given by the outlier in the options. So this is basically what we are doing right now.
Excellent job is being done, Mr. Angelo. So our today's podcast main theme is related with global markets, strategy, and intelligent investment. So we move on. Mr. Angelo, you spent 25 years in global markets. How do you see the current global macro cycle evolving in 2026?
Look, I've been pretty much going on TV, on CNBC for more than 10-15 years, so interviewing almost on a weekly basis. And I've been working the market since December 1999. Well, it was a very unlucky period because when I joined financial markets, everybody was going up, all-time high, almost on a weekly basis. And then there were 3 years of recessions, 2001, and all that came after that, 3 recession and 3 years of bear market. It was a very particular situation. The way I see it, the general consensus is that 2026 for the S&P to gain anything between 8 to 12%, around 7,500 target, 75, 7,600. That's the target of the main investment banks, the average. I'm a little bit bearish on this idea. Two main points. There is geopolitical tensions as increasing out there, US, Iran, possibly China, Japan, which with the new prime minister might be very confrontational against China. The situation in Europe still evolving. Trump might be a little bit erratic in the international relations, so we don't know what might be happening. Markets, it looks to me that they haven't priced in any of these situations, which usually markets don't do it till something happens, which kind of makes sense. But on the other side, there is another important theme, valuation. Valuation are whether you take price earnings, price forward earnings, price sales, or any other possible important ratio, they all are hitting close by to the record high last time touched in 2000. I'm not saying that we're going to see a replay of what happened in 2000 when the Nasdaq lost 80%, but we can already we're already witnessing a big rotation in the markets, less US, more emerging markets, due also to the weak dollars, and I believe this weakness dollar is going to continue. Two, less growth, more value, and that's why the Russell 1000 is overperforming the S&P 500 big time. Magnificent Seven, they are down by 1,000 basis points vis-a-vis the S&P 493. More energy, less technology. Energy is the first sector among the 11 at the S&P 500, gained already 20% in 1.5 months. Second is utilities, and then consumer staples. The last is IT, financials, and also the consumer, the communication services. Now, the big disruptor has been the AI, which it will change, will affect the way we live in, probably more than internet. Is already affecting, software companies collapsed. They lost like 40% on average in a few weeks. Now, financials have been hit by the AI because of the new models are able, to substitute many of these companies probably. So the reality is that nobody really knows what will be the impact of the AI. The reality is that the big seven, Magnificent Seven, that bring a lot of money, but they're investing heavily in capex. According to Goldman Sachs, 2026 they might be spending 450 billions in capex, the so-called hyperscalers. So there is no Apple, but there is other companies into this area. And the question for investors is: A, this big spending will eventually pay off. B, how much? And now these companies also, issuing bonds to sort of financing their capex spending. Now, the big question for investors are two: A, the macro scenario will be somehow be weaker this year, considering the old situation out there. B, the price I'm paying for the Magnificent Seven, because look, the first 10 S&P companies weight almost 40% of the entire index. So that's what we're talking about. That is very skewed towards the big companies, the S&P 500. And if the big companies, Amazon lost 7 days in a row. Last time it happened was 2006, meaning there is a little bit weakness on the Magnificent Seven. If they're gonna start, investors are gonna start selling them, the oil markets are gonna go south. My preference for emerging markets, to be honest, in terms of price earnings and valuation, a little bit of Europe, but I'm very positive on emerging markets because of weakness dollars, because of demographic situation, which eventually is going to be a big upside for the emerging economies compared to Western economies, and also because the S&P as of now counts for 70% of the Morgan Stanley World Index, and that happened rarely. So I believe there will be a new redistribution across other countries and probably emerging markets. Take Brazil or also Southeastern Asian economies, they are already becoming the biggest beneficiaries of this less American and more international sort of approach.
Thank you so much. Let's move to our next section, investment strategy and risk management. You emphasize autonomy and discipline. What are three major common mistakes investors are making?
That's good point. It's the classical question that my students ask me every year at university. First of all, and there is the main point, investors, they have no idea what risk really means. I keep reminding them, look, you can control only one thing in financial markets, and it's called risk. So this is something that eventually they don't know how to deal with. And this is going to be a big downside for many of them. Second, I've seen many investors nowadays, they are becoming very greedy because they see, up to 2025 that everything was, going up. So, and that's buy the dip mentality is been very spread out. So investors are becoming greedy, and this is in the long term, it's not going to be a good element for them. And then if I might say another another downside of investors is not diversifying and not hedging their wealth they have been building up, thinking the markets might be only going up. And because I know that there are lost decades in the markets, 1968, 1982 in US market, 2013 for Nasdaq and S&P, I cannot help but wonder how is it possible that investors they have insurance for home, for travel, for cars, and they don't have any insurance for the savings. At some point, you need to get that.
Thank you so much. Can multi-asset strategies truly protect portfolios during downturns?
A very good point. Technically, the idea of the hedge funds is to hedge risk. Now, the reality is some of them, they're very directional towards one side. That's why since I start, trading and being in financial markets in 1999, I know what a prolonged bear market means for you and your investments. I believe that hedge funds and multi-asset hedge funds, they need to provide you a buffer against any possible market turmoil. That's when you see the real added value of these products, and that's why my idea when I decided to come up with this structure of this hedge fund was not much to beat the market. I'm not really aiming to beat the market. I'm aiming to give you a positive performance, but mainly my purpose is to hedge when things are going to go south. And this is the main point of the multi-asset hedge funds. That's why we're doing equities, bonds, options. And when I say option, I mainly focus on volatility structure in volatility options that are made for shielding the fund from possible downturns, which when it's going to happen this time, is going to be big. And you need to shield your clients through possibly hedge funds, multi-asset management companies.
Thank you so much. We move to our next section, alternative fund and institutional thinking. What differentiates your upcoming alternative fund from traditional asset management models?
Let me give you some statistics. As of 2024, alternative assets, and whenever I say alternative assets, I say private equity, hedge funds, arts, you name it. They are almost, they make almost 20% of the institutional investors' portfolio. Now, traditional assets, look, it's not me. Let's take 2022 as an example. The all-weather portfolio, 60% equities, 40% bonds, have been performing extremely well and shielding investors during recession as of 2008 or in other situations when the equity markets collapse. Then the bond markets picks up because of recession. But there is one word that no one investor likes, which is called inflation. Inflation, when it hits in 2022, it was one of the worst years for bond markets ever. At some point, I remember November 2022, it was one of the worst years for the US bond market since the French Revolution. Then they recovered a little bit in the last month of 2022. But anyway, all-weather portfolio ended losing 16%. Around 20% the S&P, 30% Nasdaq, and like 16-18% depending on which global aggregate bonds index you would pick up. So the reality is that the traditional portfolio is not made to survive the next turmoil. That's why I believe that institutional investors, they know it. They are diversifying into alternative assets. Private equity is a little bit too crowded trade. They have some difficulties in exiting some of their investments, whereas hedge funds on the other side are very liquid on average. Usually they invest in very liquid products, and therefore I believe they're gonna give a big contribution in the diversification for the institutional investors.
Awesome. Do you believe hedge fund style strategies are the future of portfolio management?
They are already some of the present, and it will be even more in the futures. The assets are, according to the Financial Times, macro fund, the multi-asset hedge funds. They might see the asset under management keep increasing in 2026 because of their performances. And I believe that they will always be part of the future portfolio of any institutional funds, asset management, family offices, and also high net worth individuals. Now, let's say the private equity try to democratize, they say, the private equity investment by, packing some of these private equity funds into ETF and selling to private individuals. I believe that hedge funds can achieve pretty much the same goal, mainly to professional clients. And I believe that if you're a professional investor, you would need to have 10%, 50% of your assets into alternative assets.
Awesome. Our next our next discussion topic is related with energy, OPEC, and commodities. As a former accredited OPEC analyst, how do you see oil markets evolving?
I was lucky enough to be a credit analyst at OPEC Plus for 4 years, from 2016 till 2020 before the pandemic hit. My last meeting at the OPEC was March 2020, and then there was a COVID and things, went the way they went. So I kind of know pretty much the inside of the OPEC. I believe that the energy, as of now, and I said that even last year, is the only proper undervalued sector in the financial markets. The S&P energy at the end of 2025 was weighting only 4% of the entire US stock market, way down from the peak of 2000. Now everybody is kind of the very crowded trade is tech. I believe that energy has gone brilliant futures ahead of itself. Will become again the theme for many investors, and I can see, as a matter of fact, energy sector in the S&P 500 is the best performing sector in 2026, gaining almost 20% in a little bit more than a month and a half, and the energy companies are getting, of course, reaping the benefits. I believe that this trend might become something similar to what happened in the metals in 2025, where gold, especially silver, platinum, they basically jumped more than 100% in a single year. And I believe that energy will be the second, the other sector that what investors should be in. In order to reap some of the benefits, because it's been a completely abandoned sector for the last 5-10 years. B, so there is a lot of value into this sector. B, also strategically could be a good sector to be in case of escalation from a geopolitical perspective.
Thank you so much, Mr. Angelo. And once again, I'm very grateful to you that you joined this session to discuss in detail the probable businesses where we can collaborate. And the audience of Global CEO
Right.
Club can get benefit through your platforms. Thank you so much once again. How does energy policy impact global inflation and investment returns?
Inflation was a war that nobody knew till 2021, 2022, because since the great financial crisis 2008, there was no inflation really worldwide. Then eventually it started hitting and hit heavily. In fact, 2022 was the worst year for inflation since the 80s. I think inflation has been subdued for 15 years due to globalization, due to weakness of the economies, etc. But nowadays, with the supply chain, which has been negatively impacted by these new policies, especially from the US government, and we're talking about inflation 2.4, 2.5%, which is getting back to where it's supposed to be in the US, but it's getting there with the oil, which is trading around $60, $63 per barrel. If the oil is going to pick up, how I believe it will eventually, now there is a supply glut, so price of oil is going to stay pretty much there. But if eventually oil is going to go towards $80, inflation might be picking up as well. I don't believe there's going to be a second wave like in the 70s, because in the 70s there was a second wave of inflation due mainly to the oil crisis. But I believe inflation will be higher than we saw earlier during the after the financial crisis up to the pandemic. I think inflation will be higher than many central banks might be expecting in the years to come.
Thank you so much. Now we move for your leadership and personal journey. Turning 25,000 euros into 250,000 euros just in 4 months is extraordinary. What key lessons did that experience teach you?
Discipline, and then again discipline. That's the only real asset that you might have in the trading style. When I started trading in 2000, I made a lot of money and I lost 70% in 2 months in 2002 because, at some point I thought that after Nasdaq lost 50%, would have been a really good sign for buying. It wasn't. It turned out I had to sell everything and lose 70% in 2 months. Still remember it was 2002. I started buying futures on Nasdaq. I remember it was the day after Easter, and because U.S. markets are open, only U.S. markets. And then after 2 months, it was June 2002. I had to sell everything, losing 70%, which was at the time was big money for me. It was like big money anyway, but at the time even more. Then I learned that I didn't have any discipline, any risk management tools to that could help me out. And then I learned that if you really wanna make money in the market, you don't know. In reality, nobody knows where the market's going to go. So in reality, the only thing you can control is yourself and the risk. Therefore, I believe that discipline should be is the main driver for any performance you might want to make in the financial markets.
Thank you so much for sharing with us your brilliant experience. Thank you once again. What separates successful traders from those who consistently fail?
Okay, according to statistics, 75% of traders lose their money. They keep losing money in the financial markets. As based on my experience, because I've been a broker as well, there are two main problems: leverage and they're greedy. Most of these retail clients, they want to make money today. They don't have any patience. They don't want to wait. And this is gonna be a big, eventually a big hit for them. I learned that, and this Warren Buffett is better than anybody else. Patience and time is the only real asset. Think about these numbers. Warren Buffett, one of the richest men in the world, when he was 65, his total value was, I think, 1 billion, something like that. Now it's worth what? 150 billions at 95. So in reality, he made money from 65 till 95. So that's what we're talking about. And he started investing when he's 14. So be patient and do not over leverage yourself ever.
Thank you. What advice would you give to CEOs managing corporate treasury in volatile markets?
Reduce your volatility, especially nowadays. I believe nowadays volatility is not really priced for what it might be. Therefore, I keep telling all my clients, be patient and take it easy now, because there are moments when you need to hit hard and make money. There are moments when you need to play in the fence. I believe nowadays playing the fence will be a big upset in the long term.
Thank you so much. Our next section is related with Global CEOs Club, Angel, Strategic and International. How can emerging markets like Pakistan position themselves to attract global capital?
Look, I bet that Pakistan has been improving heavily in the last few years compared. I was, kind of dealing with them 10 years ago, 15 years ago. Things have been changing for good. And I believe that Pakistan might hit the world stage if some reforms will be enacted within the country. But I can see that the road that Pakistan took is probably the good one. So it's going to take probably more years to come. But the secret of these countries is to attract foreign capital. If you are able to attract foreign capital, that's the biggest challenge for emerging markets. Then with many of these emerging markets grew through foreign capital, getting into the country. And if Pakistan will be able to intercept some of this foreign capital, there will be the big, game changer for the country.
Thank you so much. What sectors globally are most attractive for cross-border investment today?
Well, everybody's getting the AI, tech AI. The reality is that many people will lose lots of money in the AI, but winners will reap huge benefits. I don't see many other sector cross-border where you would invest if not AI-related matters as of now. Robotics, AI, robotics, these sort of things. The futures especially robotics probably. They will be where I would invest more.
Thank you so much.
If I might, I would add the quantum
computer, but it's probably 20, 30 years down the road, I guess. I got some stocks of quantum. They lost 70% the last month, so I will keep a little bit, low profile.
What role should policymakers play in stabilizing investors' confidence?
Wow, that's a good point. Look, what I believe is that everybody thought that Trump was a destabilizer in the investment world. It turns out it wasn't so far. Even though the U.S. market is basically doing the least good performance since Obama in 2008. And said that about the policymakers, the multilateral sort of system we built has been working pretty well. There were issues, of course, as in many other situations, but over the years, it was a good system. I believe that if you go back to the multilateral systems that ruled the world in the last 40 years and change a few things that are not really working, then might be the system to could drive us into a better and prosperous future.
Thank you. How Global CEO Club and your entity can collaborate to bring investments to facilitate the business as well as the governments of the world can collaborate?
I believe that your idea is a very bright one because you try to put together investors, other vehicle investment, different than others probably, give access to people to investment usually not accessible through a network of people. I always say, if you have a Ferrari, but nobody knows you have a Ferrari, it's completely useless. So your idea is that to show other people that they might have a good product, and then show to other people that could be, a mutual, could be mutual beneficial. And I guess the idea behind Global CEOs Club is this one, to show what you can do for helping each other. Other than that, there are these big communities. They were born with this idea, and you are kind of bringing this idea towards the CEOs, which is pretty kind of long-term. Idea and very bright.
Thank you so much, Mr. Angelo and Mr. Tesivald. You spared some time to discuss in detail your vision, your ideas to penetrate for the investment. Thank you once again, and both of you, I'm very grateful to you. Thank you.